All right. So to start this, again, 3:30 Central, journaling webinar with Dr. Brett Steenbarger and myself. If you're watching this on recording, you probably find it on my YouTube channel. It's Trading Group. But that's today, 3:30. You guys don't have a link, just put a request in the chat right now and I'll send it to you. Steenbarger and myself. It's a different link than this one, so don't think you're going to come and use this one and get to that. It's a different link altogether. Ask me for it and I'll send it in. But it's on journaling. And like I just said a moment ago before I started recording, verbal journal that I created is for Sierra Charts and for Ninja Trader. If you have one of those two platforms and you don't have the verbal journal and yet you're part of this group, again, I check you for holes in your head. You got to have it, even if you just use it once a day. You'll be able to look back 3 months, 6 months, and you might find you're listening to a totally different person in the way you could document your progress and how you sound. I don't just mean sound when you're in a trade, but just sound the way you're talking, because everybody sounds more like they're supposed to when they become a carpenter from an apprentice carpenter. So make sure you guys are on top of that or get that and have that. At this point, let me send this link to everybody so I don't forget. A rule of thumb is more than 2 people ask for it, I send it to everybody. So I'm going to send it to everybody. Give me a second. 3, 2, 1. Everybody should have it. Again, that's for later this afternoon, 3:30 Central, Dr. Steenbarger and myself. In the summertime, and that's when these events are taking place, these coaching sessions, in case you're watching in the future. We're in the middle of the summer, right? So with all that's going on, pandemic, social unrest, stimulus, no stimulus, vaccine, no vaccine, a lot of cases, no cases, and everything else, we're going to be more, and we have been a little bit more volatile than a normal summer, but we still could roll and default back into a summer market. So keep your expectations muted or keep them in accordance to being in the middle of the summer, and don't let yourself have your eyes get bigger than your stomach when you look at big overnight ranges or something like that. Now we just die off. All right. And if you look at a daily chart just to get people a sense of perspective, we're all the way back from this sell-off 5 or 6 weeks ago on the second wave of coronavirus. We're all the way back and through those 25, that level in the S&P minis, right? And we're working on the February 22nd price where we left off on the price in a pandemic and a shutdown and everything else that took place, right? So all-time highs are right up here, essentially in striking. We already went through, they're within the crosshairs. We already went through that a couple of weeks ago in the NASDAQ, for crying out loud. So these markets are capable of going back through where they started and then some. Don't let yourself get bearish and run over. The last 10 or 12 years, people have had a bearish opinion, and they talk about the disconnect with the economy and everything else, and all they have is a debit in their account, whether they trade futures or stocks or anything else. Don't fight City Hall is the old saying. That's what fighting a move up in stocks the last 12 years has been. So all this stimulus, and that's what we're in right now. Europe just passed a big package overnight. They're looking at, what is it, round 4 in the U.S. of stimulus. McConnell has just come across. Secretary Mnuchin's meeting with Pelosi. The Democrats are at like $3.5 zillion. I think they're in the zillions right now. Democrats want a zillion, and the Republicans want half a zillion. They all want something, though. Don't let them BS you. But one's at $1 trillion, one's at $3.5 trillion. I'm surprised that the Democrats want to make, or anything that makes President Trump look good. I thought they would be a little standoffish. So, and that still might be the case. Even though they sound optimistic, they leave for a break in August. And so don't be surprised if nothing gets done and the market gets hit because of it. But either way, the market wants stimulus. Why wouldn't it? Markets are like a spoiled kid. They never could have enough candy. So they like stimulus. They like low interest rates. They like Fed, and up they go. So that's where we're at right now. The V word, vaccine. The last week or so, it's been nothing but positive news from this company, from that company, third trial, great results, and the market has traded it accordingly. That's obviously important. Also, the polls between Biden and Trump, I don't know if they're accurate or not, but what I want people to do and what the markets are going to do is you kind of get a benchmark starting in June. We started getting Biden having a lead of X amount of points, right? You look at national polls and state polls and everything else, but whatever. Now we're into July, late July, and now we're going to go into August. And I would want people to watch these polls to see the June, July numbers, what they look like July, August. Do they tighten? So even if they're inaccurate in June and July, if you could compare them to, an inaccurate poll versus an inaccurate poll, you might be able to glean that Trump is gaining on it or losing ground. All right. Think of it that way. The market's the true poll that you should watch. And I read something a week or so ago that by September they start pricing in who they think is going to win. Bullish if it's Trump, bearish if it's Biden, at least on the surface. That's the way the market's going to treat this election. And I don't think it's too early to start talking about this now because we're in late July. And you snap your fingers, we're going to be in the fall. Now, yeah, I don't know of anybody. Someone just asked, does anybody here answer polls? I don't know anybody who's ever taken a poll. Listen, there's a way to manipulate anything, including polls. And so they got it wrong 4 years ago. They admitted they got it wrong 4 years ago. And if you were to ask them, well, what did you do to change it so you're not going to get it wrong this year? I don't think they'd have an answer. But yet they're not wrong this year. So either way, the poll is the market, and then the actual election day are the only polls that count. So moving through current events to what, like, I don't know if I said it during the room or during last week's session, what headlines could make us go up or down quick. Any negative updates on these vaccines? What I'm hearing, and I'm still talking to a couple of people I have left to talk to, but what you can hear with respect to updates on this vaccine trial, I'm hearing that there are milestones you can get data. Then I'm hearing that you don't hear anything until the end. And then I'm hearing that if you do hear something between now and the end, it's usually because it's bad and they are stepping away from the trial altogether or something. But that's the whole progression of a vaccine, which is awfully important, as you know why, as these potential vaccines move into the last trial or stage. So it's important to hear any headlines and know what to do with it. I think in the more near term, polls that the market might start believing in, you'll see a reaction to it. We'll see. We'll wait. We haven't seen anything like that yet. The stimulus, they're going to want it. I think they're pricing in that they're going to get it. So if they don't, and you hear that there's too much daylight, I think the market will break. Personally, I'm not going to be surprised they can't get together because I feel like the Democrats might make Trump look better with the stimulus. So who knows? Wait and see. But those are some of the things to watch and headlines that can move us rapidly. We also have earnings. Might not be important for someone watching this in a few months, but earnings are coming out when they're the bigger companies, especially the FANG companies. I think it's important to be in front of your screens when they report before or after the bell. So let's get on to today's subject matter. And I'm abbreviating these Tuesday sessions because it's the middle of the summer and I want to get in and out. And I want people to think of these sessions. I've said this before, is if we all worked in the same office, every Tuesday at 11, we come in the same conference room. Sometimes I have an hour-long meeting. Sometimes it's 20 minutes. Sometimes it's 15. Most of the time it's over a half an hour, right? Throw some things up on the whiteboard, maybe Q&A a little bit, and then we get the hell back to work, whatever back to work is. Sometimes people will leave the office, whatever. So that's the mindset that you have coming in to these sessions. I want to talk about process, but why is it so hard? I'm not going to go over one's process. I just want to go over some thoughts that I had over the last week that I want to bounce off of you guys. Last week, if you remember, we talked about assuming that your trade's going to only work out a little bit at a time, and you're going to take pieces out as you build out the story piece by piece, right? You put a trade on, you're not expecting it to go the entire way. You're just trying to get small pieces, a little bit, plus a little bit, plus a little bit, then you reach your targets, all right? That's what we talked about last week. This week, I don't think that it's a secret, especially if you've been trained by normal or decent educators. I don't think that it's a secret that there's some sort of process progression that you need to run through when you trade. In order to be consistent, you got to be consistent. And I don't think that that surprises anyone. In fact, I wrote this down. So we know focusing on some sort of process is important. But why is after hearing all that, is it still difficult? In other words, we know that it's important. Unequivocally, we know. But it's still hard to achieve. And I think the reason is because it's boring. Sometimes doing something boring is hard. If you want to be a better free throw shooter, you're going to have to go shoot 500 free throws a day in a gym. Might sound like fun, but I think it gets pretty boring. If you want to stay in shape, you don't have to lift 300 pounds, bench press 300 pounds like I do, but, just sweat a little bit. Sometimes it gets boring to exercise. You know what's important, but when it's boring, it's hard to do. And I want people to think of that when they're trying to get consistent at anything, including their strategy, their setup, their idea. And you're going to, I want you also to replace strategy or setup with an idea. I want you to use that word more in your process. It's just an idea. Ideas are sometimes good and they don't work. Sometimes they're bad right out of the gate and they work. So what's your idea? Instead of delving into so much detail, strategy, setup. I mean, those words are fine. They're not wrong. But think of, what are your ideas? You got a couple ideas a day you look to play out, or 3 ideas in a session, or not a session, but 3 ideas, and you'll trade one of them if they surface. And don't get lost and stuck in the weeds and get bored. And that's why I think a trading room like you guys come to is important. Liven things up. The team room is important. Liven things up. Boom, get to business. Back off, joke, get back to live. But it has to be less boring, or it's going to be more hard to follow through, because there's no question, that this is important process. You hear about it all the time, different words, but you're getting to the same point of it. What's your steps? Step 1, step 2, step 3, whatever. That's part of your process. And it's just sometimes so hard to stick to it because it's boring. Yeah, and I get it. Some people are struggling with, did they see what they thought they seen in real time? It's easy to see after, harder to see real time. Of course. Sometimes it's easy to see real time, but you're not objective, so you have no chance of seeing it. I mean, you ever get in a situation where you miss what's right in front of you? And I don't mean in trading, but in life. Someone standing right in front of you, you didn't see it. You looked around it. You're not aware. That's how powerful our brains are. So you have to know what you're looking for, and without looking too hard, when it rears its head, you are able to recognize it. You're not stressing out over looking for it, because once you have to look too hard for a trade, I often say, when you find it, don't take it. Let the trade find you. But when the trade finds you, be ready. This is your idea. It found you. Be ready. And as long as you have risk, which is what? A loss, monetary loss. As long as you have that identified and you're okay with what you could lose and not get so pissed, then follow your process. You break your process because it's boring to take a quick stop, or a stop that is a stop that you're okay with. It's boring. So you run into adding, or maybe you don't add. You're like, well, Anthony, I don't add. But you also don't honor your stops, and you take monster losers once in a while. And why do you do it once in a while? Because you did it because once in a while it works. Why do you do something stupid once in a while? Because once in a while it also could work. That's why. Why do people who add know it's bad but do it? Because it lets them off the hook sometimes. Because it works. Why do you take giant losers? Because once in a while the market comes back, and that giant loser that you didn't get out of turns into a scratch or a small winner even. That's why we do stupid things, because once in a while it pays off. But manage your risk is taking losses. That's what risk management is. It's taking the effing loss. You don't have to read a book on it. I just took all the books ever written on risk management, and I was able to simplify it, distill it down into one saying: take the effing loss. That's what risk management is. The one that you plan to take. Obviously, part of risk management is to have a predefined risk, but take the effing thing. It's part of your costs of doing business. Getting gas on the way to work, paying an employee, a marketing outlay. That's what a losing trade is. So don't get so beat up on taking a loser unless you weren't supposed to take the trade in the first place, because it's so boring to follow your process. Being consistent and pulling money out of the market consistently isn't boring, and that's your goal. Who cares how you get there? You make it less boring by joking around and laughing, but don't let boredom create breaking up your process, your rules. You missed a good trade, so you take one that you wouldn't have taken if you didn't miss the trade. Knowing where you are wrong before you get in, that's the first thing I learned. The guy walked in and said, know where you're getting out before you get in. Some guys had no idea about how to spell trading in that first class, and that was what he kept underscoring. Know where you're getting out before you get in. If you're a baseball player, know where you're going with it if the ball's hit to you. My dad told me that when I was 6 years old. So I'm keeping today's session very short, number one, because of the one I'm doing in a few hours. You guys got the link in your chat box to join. Steenbarger is doing it. I'm going to have it recorded, and I'll probably upload it to my YouTube channel, not the website. This short coaching session will be on the website, but this afternoon's event with Steenbarger will most likely be on YouTube, and it's on the Verbal Journal. Go to verbaljournaltrading.com and get it if you have Sierra or NinjaTrader. If you don't, either you're cheap or you just don't believe in review, one or the other. And why don't people like the journal? Because it's boring. Everything goes back to that. And it is boring. That's why that Verbal Journal makes it less boring, because they make it, simplistic and practical. And your goal with a Verbal Journal is to listen to yourself 6 months from now and be like, it's like a different person the way you sound. How do you get confident unless you could actually be able to hear that. It's just like you get confident finally when you start building muscle and you could see it in the mirror. It's hard to get to that point because it's boring to work out. Why is a process so hard to follow? Because it's boring. So I want you to think about that. That's what I thought about over the last several days, and I wanted to bring it up to you guys. Give it some thought and always look for solutions. What could make it less boring so you could follow it and not break the rules of it. We'll see some of you guys in a few hours, the rest of you tomorrow in the room. Stay safe and enjoy the process, and you'll stay in it.